About a recent M&A which took place in the pharmaceutical space. Biocon Biologics sold their Indian branded formulation business to Eris Lifesciences for 1,242 odd crores. This deal took place on last Thursday. During its conference call, Eris said that they expect to push up the EBITDA eventually from 70 crores to 100 crores, which is basically for the India branded formulation business. To discuss this and more and the opportunities, we have Amit Bakshi, who's the CMD of Eris Lifesciences, joining in to discuss this. Amit, hi, welcome to the show. Well, before we start discussing what exactly this entire M&A brings to the table for Eris Life, just wanted to understand that what is the consolidated debt on Eris Life's books now, considering the number of acquisitions that you all have made, and you're shelling out 1,240 odd crores for this particular acquisition via debt as well. So explain to us, what is the consolidated debt on books? What is the cash on books currently?
So we are net 3,000 crore debt at this point of time, close to that number.
So the gross debt is, I'm sorry, I didn't get that figure. It's around 3,000 crores. What's the exact figure?
Yeah, very close to 3,000 crores, roughly around 2,900 and some change.
Okay, so you're roughly around 2,900 odd crores, roughly around 3,000 odd crores in terms of the total debt on books post this acquisition as well.
Post this acquisition, Ekta, and also we, that 19% which the promoters had acquired in the Swiss deal, even that has been taken back. So post that, it's another 250 crores around. So all put together, we are close to that 3,000 crores mark now.
Okay. So what is the plan now when it comes to debt reduction, considering that you've made a number of acquisitions in the past couple of years? You do have around 3,000 crores of debt on books. What is the plan when it comes to debt reduction? How are we expected it? How do we expect the deleveraging to take place?
So Ekta, simply put your heads down, ruthless execution at this point of time. The good thing is we've always been 75% OCF. So that's one thing which, which the business has almost always. And all these businesses which have come, they have come with their own EBITDA and own OCFs. So the plan is very simple. Just put your head down, do a ruthless execution, and as fast as possible, get the debt down.
Any timeline in place, Mr. Bakshi, say by the end of this calendar year, next fiscal year, how much will debt come down by?
Look, I think we should be getting it down by 700 crores, but in this fiscal, that's the best case scenario. But then there will be an interest cost also. So at best, we will be say 400, 500 crore off by the end of this year, which will get our EBITDA to debt again to that 2.2 levels, 1 year forward. And then if everything comes together, that's the plan. If need be, we can see something else. But as of now, this is what we have in plan.
Okay, so I just want to clarify that you're looking to reduce debt to the tune of how much by the end of FY24?
So Ekta, roughly 2.2 to 2.2 EBITDA. 2 to 2.2 times EBITDA. That's the plan which we are going through by the end of this year.
Okay, so in the next 12 months, we should see a debt reduction to the tune of how much, if you have to say it in absolute figures?
Ekta, I don't have the absolute figures, right? So you please excuse me there. But generally, I think we should be getting 750 kind of odd OCF this year. Then there is a service, there's a interest to be serviced. Some more capex maybe on the manufacturing, the routine capex. So beyond that, every money is going back to debt payment.
Operating cash flows of around 750 crore rupees, and you do have some capex as well that is lined up. Let's talk about your branded biz revenue. It's around 360 crore rupees per annum. What is the expected run rate going into FY25, FY26? What is the growth rate that you're looking at?
Yeah, so we have put almost all the growth levers in place now. We did a dermatology deal a couple of years back, then topped it up with 2 more acquisitions. And then we took it at 10% EBITDA, and we were able to get it to 35% EBITDA. So we are now looking at 5,000 crore for in the next 3 years. So that's the basic plan which we are chasing. And we believe that when we come to 5,000, our EBITDA levels would be in the same zone, 34 to 37%. So that's the, mota plan which we are looking at. So growth rates, the new acquired business, because we have got it with people, we are very happy to have people. So generally, when you do an acquisition with people, the growth tends to be better. Because the people are you can just take it off. So we are very excited about the insulin business. Insulin is something which a little bit close to our heart also. And in the last 2 years, we've done a decent job with our own brands of insulin. So insulin is something which we are a little kicked about. CCD, critical care business, because we were not able to tell. Actually, all this was conceived together. When Swiss and this piece was conceived together, but it doesn't place the way you would like always. Now we have all the pieces together, so the injectable business could really be a big business for us in the next 3 to 4 years, and that's where the plans are.
Okay, all right. That point is taken that, it's probably going to bring a lot of new segments to you all, such as critical care, oncology, sterile injectables. But I was listening into your, conference call that you held, and there was some concerns with regards to the growth aspect of the diabetes segment. That 2 of the brands that you've acquired, which is worth around 100 crores each, are a little sluggish or slow growing. And there have been factors such as NLEM, which has impacted the growth as well.
Correct.
What are you expected to achieve in terms of growth when it comes to the diabetes portfolio from the Biocon acquisition, and how much is it growing at currently?
Yeah, so Ekta, the current growth in the market is like a couple of points, 2% on the unit side. But also remember, at the same point of time, Ekta, when the market were equally sluggish, we were able to put our 2 brands, greenfield brands, in the last 2 years, which would close at 45-50 crore this year. So it's not always the units, and which basically designed how much you can. We think there's a lot of displacement space available in these markets, and that is where we are. The good point is, it's not only the top line. Our supply arrangement is something which we are very, very excited about. With this kind of a supply arrangement, and the Biocon glargine is not a usual glargine. It's a glargine which has interchangeability data with the innovator. So in our terms we call it biosame. So it is not like anything else. We feel that Basalog, the glargine brand which we have acquired, has a lot of legs, and we would like to give it a full force.
Okay. All right, Amit. Well, we've completely run out of time, but we do have a lot more questions. Maybe we can touch base once you do release your Q4 numbers, so we get a better sense as well in terms of the integration of this recent acquisition that we've made. Just before we let you go, any more acquisitions that you're considering now, or you're probably going to step on the brakes when it comes to that?
No, I'm absolutely clear. That's where I started the call. Heads down, ruthless execution, not looking sideways. And this was all a plan. 2 years back we sat together and we said, okay, what are we doing in the next 5 years? We were seeing the unit growths getting lower and lower in the markets. We need to have a different approach at that point of time. So while some of it comes like as if we are trying to do abruptly, but we had this plan 3 years before, and we have been playing to the playbook. We are already done. We are absolutely done with all our, growth, growth levers. Now it's simple execution, nothing else.
Okay.
Okay. All right, Amit, we're going to leave it on that note. Always a pleasure. Thanks very much for joining in and talking to us. So that's Eris Lifesciences. We need to take a short break. We'll get you more on the markets once we're back. Stay tuned.